So S&P looks really good. NASDAQ looks really good. I'm feeling FOMO, guys. I would be lying if I wasn't feeling FOMO or telling you that I wasn't feeling FOMO. So my perspective on stocks and indices has been very, very overall right. Now, was I early to thinking that the indices were likely not going to continue to plummet? Yes and no. So on my channel, you can go back during all these dates and watch my videos. The comments section was a bloodbath. People who never watch my channel flooded in because I got a lot of views during this time. I'll tell you straight up, this was a great time for YouTube content in the trading space because everybody had questions about what was going on. But I can tell you this, the bears absolutely attacked my channel. Go look at the comment section during this time. I know someone's going to go do that. You'll have some enjoyment. I did. It was interesting. You had all the bears come out of the woodwork. It's amazing, these guys. I think they hibernate. Well, hey, they're bears, right? They hibernate. This is the perfect. Maybe that's why they call them bears. They hibernate most of the time, and then all of a sudden they come out swinging. Everybody on the bear side of things. Oh, this market's been pumped up for 2 decades on hot air, and it's now going to crash to zero, and it's all over, right? People were absolutely sacrificing me in the comment section. Well, I take it back. There were a lot of people that had never watched my channel before that were coming in and calling me an idiot for being bullish on the market. Okay. Now, I am not saying, I was right. Because when I started buying stocks, I started buying stocks over here. So was I right in calling the bottom? Absolutely not. I'm not bragging. Okay. I bought some stocks here. And I did buy aggressively here. Did I catch the absolute bottom? No, but I got pretty close in terms of when I was buying. I bought here, so I was early. I bought here, I was still early. I thought we were breaking out here. I was wrong. So I'm not here. I'm not patting myself on the back and only pointing out my correct decisions. But let me explain, right? I scaled in. I dollar cost averaged with no leverage. And let me tell you how this played out for people. I know this story well. Everyone who's new to trading, listen to this for a second. This is a rotating wheel. People get churned in this system and spat back out. This is how the markets work. When this market was selling off like this, people were buying puts, which are essentially a leveraged way to bet on the markets. I know this to be a fact, not a guess, because we track that data. Look at the put to call ratio. This shows you that the volume for puts went off the crazy deep end, okay? People, look at this time. April 3rd, April 4th, April 5th, April 6th, April 7th, April 8th, it peaked out in terms of bearishness in the actions on the options market. April 8th was right here, guys.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Right there. That's when people got peak bearish. And again, go look at my comment section in that time and you can prove to yourself what I'm telling you. People get loudest on the bear side at the bottom. My comment section, I swear, might be one of the best trading indicators in the world. I'm not even kidding. I use it all the time. Hey, I'm not ashamed to say it. I use my comment section as an indicator. Now, you guys who are regulars, who have respectful comments, who have, insightful thoughts, even if you disagree with me, there's nothing wrong with people disagree with me all the time. I don't mind that. It's the name calling and people calling me an idiot or all caps spammers. You guys know who I'm talking about. I'm not saying like this hurt my feelings. I'm telling you that when those comments flood into my channel through my history of doing YouTube, those have been market bottoms. So I'm telling you this because, again, that's how this market destroys people, is because people get so bearish at the worst possible times, and they also get bullish at the worst possible times, and they have a herd mentality to them. So this was an excellent indicator that, again, doesn't mean that we have to turn around right away. In this case, we did. In this case, we reversed so hard and absolutely destroyed all those bears. Why? Why do I know that the bulls won big time here? They absolutely destroyed the bears. You know why? Because bulls, and I'm saying this, I'm taking an extreme straw man example, so bear with me. I'll rectify it in a second. So I bought some stocks here, I bought some stocks here, I bought some stocks here. No leverage, no huge gamble, no massive risk to my account. I bought stocks gradually on the way down. Let's cross that with my ultimate straw man example of the extreme bear who put their entire account, they sold all their stocks and they bought puts aggressively. What happened to that person? Well, if you know how options work, they can expire worthless. So you can lose 100% or quadruple your money depending on what happens next. So let's say, since we took this as the example, April 8th was the apex. It was the highest point of put buying that went on this day. So let's say people were expecting the market to take out the lows and to crash further. If you bought those puts the very next day from peak pessimism, that was Liberation Day in a different way. It liberated the bears. They got absolutely liberated because that was a horrible, if you bought puts on the peak day of bearishness, like everyone else did, you got destroyed. And what did the bulls, the cautious bulls, do? They averaged into stocks for the long term that have great futures ahead, despite the political fear and headlines going on. Doesn't matter if you like Trump or not. This is a market story. Doesn't matter who the president is. Doesn't matter what your political views are. This happens over and over and over. But people let their politics get in the way. People let panic settle in, and that gets them to sell their whole, portfolio. Yeah, Lincoln. I mean, people got obliterated on this day. Now, this was my best trading day of my career. From a perspective, I was long gold heavy during this time, and I was long a whole bunch of tech stocks. This was my best trading day of my career. At the peak pessimism, the risk to reward gets so attractive that I have to step in and buy stocks. That's something I've done for many years now, and it has worked very, very well. Will it work forever? No. At some point, there will be catastrophic tanking markets. But again, probabilities are all we can do in this game. And so I just explained that process to you because it's a really important lesson that I think many traders need to hear. When everybody gets bullish or everybody gets bearish, be very careful because the risk to reward is oftentimes in the opposite direction. So where are we at now with the S&P 500's put to call ratio? Well, we're right smack dab in the neutral territory. So this is why personally, you guys, if you've been watching me on the indices, I like them long, but I'm not chasing. In fact, my favorite indicator on the entire Edge Finder is the put to call ratio. I stare at it every single day. We got news in just a second here, guys. Let me not miss the reaction. We have unemployment claims. Let's see if it moves markets. It has not been moving markets here recently. So let's see if it does anything this week. Unemployment claims coming in. Last week, they were a little soft, worse than expected. Let's see, with a forecast of 231K, how's the jobs market looking here? Very curious to see, actually. Okay, 228,000 jobs, unemployment claims, pretty much as expected. So not a huge surprise in either direction. So we would not expect too much of a market move in either direction either. So I was just ranting about the put to call ratio. I love this indicator. It is one of my favorite things to look at. So why? Well, because sentiment, I've been talking about this recently in my videos. So you guys know I talk about it all the time: technical analysis, fundamental analysis, and sentiment. If you're new to the channel, These are the 3 pillars that I consider when deciding which trades I want to take. In a nutshell, I consider these 3 things. For fundamental analysis, tells me if I want to be bullish or bearish. Technical analysis tells me if I want to be, where I want to enter and where I want to get out. Technical analysis also helps with risk management for me. All of these things are important, but sentiment analysis, I think, is underappreciated by a lot of people. A lot of people on this channel even, they're like, okay, technicals are a little overestimated. But what's underestimated is certainly fundamental analysis, in my opinion, and sentiment. Both of these things are underestimated by the retail trading world. Sentiment is really powerful. Why? The ultimate power of risk to reward or sentiment is risk to reward. You can sharpen your setups. Your risk to reward can become sweeter by learning how to properly gauge sentiment. Okay? How can you properly gauge sentiment? And why does that matter? It matters immensely. So I told you guys that my best trading day of my career personally was this move right here. At that time, I was long gold and I was long a lot of tech stocks. I still am. I've continued to hold my tech stocks since that time. This was the best trading day of my career. What made it the best day of my career? Sentiment. Sentiment was horrible. Everyone, it seemed like, thought the market was going to crash the day before. And then we ripped absolutely to the heavens on April 9th. Was that April 9th? April 9th, yep. On April 9th, we ripped higher. So everybody was peak pessimism. And then April 9th, you could see a slight drop, but people still pessimistic. People have only just recently come down into a neutral territory according to the put to call ratio. So when you guys hear me saying I'm waiting for a pullback for indices, what would a pullback do to this chart? Think about it for a second. So markets have done this. They crashed hard and now they've started to put in some higher. This is basically where we are. What would a pullback in the S&P 500 and the NASDAQ and the Dow Jones, the Russell indices, risk assets, Bitcoin, etc., what would that do to the put to call ratio likely? It would likely cause this thing to shoot back up into that extreme fear, high put demand territory, which would make the risk to reward attractive once more for a long trade. So I watched this thing really close. The put to call ratios, like I said, it's my favorite sentiment indicator within the Edge Finder, and I look at it pretty much every day. By the way, we do have the put to call ratio for more than just the S&P 500. We have gold on here. We have, so you can see gold is kind of still in neutral territory. We have even like the Nikkei, like what the heck is that move? That was the same time period, right? That April 4th post, kind of tariff announcements. We also have oil. We have gold, of course, Dow Jones, DAX. We even have Chinese stocks. So, which is crazy. Actually, I think we're missing some data on, are we? No, we're not. We're up to date. Okay. So you can look at these things and you can get a sentiment gauge. It's a really cool indicator. And it's, like I said, it's my favorite one to look at. NASDAQ is just barely outside of the extreme fear range. And so I'm watching these things really close. They help me to time my entries very well. Sentiment helps with timing. It also helps with, it doesn't do all the timing work, but it helps with timing and it helps with risk to reward factor.
Well, at the moment, I am short on NZD-CAD. No, sorry, I'm long on NZD-CAD. Yeah, I'm looking for a lot more upside for this one. I've been quite bullish on this one for a while, ever since we had that really big recovery a few weeks back, as we kind of we fell off a cliff, and then soon afterwards price recovered most of that, and I'm looking for the continuation of that back into resistance. I hopped into a buy actually last week, but we've seen a lot of retracement since then, and I have gone to break even, so I could potentially be stopped out of break even, but I will be looking for re-entries on potentially a double bottom there. So I'm still very interested in this one. I'm also short in Euro Yen, but I'm probably about a pip away from being taken out of break even for this one as well. So I'm still quite short bias on the yen pairs. We have seen a lot of weakness for the yen itself, but In terms of the technicals, we haven't taken out any major structure yet, so because we're still maintaining this swing high there, I still remain short bias. And same with pound yen as well. That's still maintaining these lower highs as well, so I'm still keen to find some entries to take this lower, but the entries is the important part. I'm looking to see what we can do at the highs here. If things look good, I will look for some re-entries as well, but that's kind of where my focus is at the moment.
Yeah, I like that. I like that NZD CAD chart, and actually that was going to nicely marry into my chart of the day. Just to follow up on that, is actually NZD JPY. So I went long the Kiwi yen, came back down into this support level. Although it's a very minor pullback on the daily chart, I did like this kind of break of this downward trend line that we've been watching for some time. We tapped back into this previous structure high just in the last few days, and I went long yesterday or the day before, I'm forgetting, but just very break even on the trade. Hasn't really moved very far, but I still like the setup. I think it has potential upside here, and I wouldn't be surprised if some of the the Australian dollar, the Kiwi dollar, these things are potentially in the process of bottoming out. It depends, of course, what's happening like macro wise, but if you get trade developments, you got to remember that these countries are hypersensitive to that, because of course New Zealand and Australia are major kind of contributors to global trade through their trade with China, right? So there's if global trade kind of frees up and improves with the whole like trade negotiation stuff, that is, especially think about this, if China and the US land a deal, how does that help New Zealand? Well, because New Zealand and Australia export a lot of products to or raw materials to China for manufacturing, to producing things. That makes it so that their biggest customer is back online. So it is something that I'm thinking that we could see. I think that trade deals are likely coming, and so that's a trade that I want to be primed for. So fundamentals and technicals kind of broken down there. That's kind of my outlook on this one. Someone asked me just before you guys joined about the US dollar. I'm curious what you guys' thoughts are on this one as well. Marco, US dollar, any of the crosses that you're watching in relation to it, what are your thoughts?
Yeah, so let's go to the DXY, and I'm still pretty bearish. So I know Powell yesterday was a bit hawkish, which should be bullish for the dollar. But just the technicals are still telling me that the sellers are totally in control here with this massive meltdown, and the bullish candles are just not the biggest size. In terms of the dollar pairs, well, I'm watching EU for longs, I'm watching GU, I'm watching the Aussie dollar as well, but I'm waiting for a signal from the edge finder to possibly get in on some nice buy setups. I would like to see them pull back just a little bit more, maybe to some more areas of support, for example, pound to touch this area right here on the daily chart, and for the Aussie dollar to also possibly hit the 20 EMA or something like that. So bearish on the DXY, but I'm waiting for edge finder confirmations to actually get in on some dollar shorts on these three currency pairs. So that is the game plan for me.
Yeah, fair enough. I think I kind of am in the middle of that too. We've had some good economic data recently with the PMIs, which have kind of muddied the score a little bit for dollar index. So just going to continue to watch that. And I saw you there just real quick before I asked the same question to Miko. Marco, you were there yesterday during the I saw you in the chat during that time. Did you have any thoughts? What were your thoughts on what was said from Powell yesterday?
Yeah, so at the beginning it was pretty much nothing, just the we need more data speech. And then later on you could see that he was, I would say, hesitant about cuts, and cuts were expected already for the next meeting, which is now scratched. So I think the Fed has become more hesitant with the cuts for this year, and they're gonna wait it out a bit more, which does give a hawkish signal because it means less cuts. So possibly holding the current rate for a bit longer, and that was the general sense I got from the meeting. So slightly hawkish, same as you concluded.
You know what I thought was interesting was there's an expectation in the bond market right now that there's still going to be 3 rate cuts this year. The reason I bring that up is that Powell, when pressed about what happened in 2018, which we did see trade war between U.S. and China during that time as well, he pointed out that they cut 3 times during 2018. However, he pointed out that the inflation situation was way easier in 2018. In fact, we had low inflation during 2018. So the point is, if we had 3 cuts in a low inflation environment where it's easier for the Fed to cut, maybe the hawkish stance that he took in response to that, maybe we're more likely to see something like 2 or 1. So the point is, again, we're dealing with higher levels of inflation at this time than we were in 2018. So perhaps more cuts or less cuts is potentially more appropriate. So just something to think. But
so do you think that's going to get priced into the bonds in the next few weeks, let's say?
Well, definitely has changed a little bit on my scope, just because, the U.S. economic heat map has really, we've seen some strong outperformance, like jobs came in better, PMIs came in better. So I think that the market was like pricing at 1.4 rate cuts. Now we've gone to 3. I think it is possible that we could see it make a move towards 2, which would be potentially dollar bullish in the short run. So I'm kind of neutral on the dollar. I would say I lean overall kind of bearish just because of the uncertainty going on and just a little bit of caution there. But we may have some potential bounce back in the dollar. And I'm curious, Miko, what that means to you. Do you think, like, obviously we're in a downtrend on the higher time frames, like the weekly time frame, et cetera. Do you think that the dollar index, which I know when we talk about currencies, you've pointed this out before too, this concept that they don't move in one direction forever, and that if we go really long term, like weekly chart, dollar index has been in a long-term uptrend. So I'm curious what your thoughts are on the dollar index. I know maybe short-term bearish, but is there a possible long-term bullish trend that could be around the corner? And what would you have to see in price to kind of get there?
Yeah, potentially. I mean, I've been looking at the DXY quite a lot, higher time frames as well. And yes, we've been in an uptrend for quite a while now, since the late 2008, 2009. But still, the overall kind of consensus is still down, and we'll kind of come back into this area, which is very pivotal because it could lead to something like this, another leg as well, which of course very, very long-term outlook. But the key thing for me with the dollar right now is this kind of level just around 100, more or less. If we can crack that, it was a bit of a dodgy close this month. It technically kind of closes below, but not really with much conviction, so I'm not quite sold there. But if we can continue falling and really get below this 100 level, then I do think the next big target for dollar potentially is back down to 90 potentially. So I do have quite a bearish bias for dollar, but I want to see a bit more conviction below this level. Short term, yeah, I do think we can see some upside. The market looks like it's running out a bit of steam as well. We've taken out some big lows to the left here, and we're kind of looking a little bit corrective now. So I think dollar might be on its way up for a little bit, but if we can see that momentum in the higher time frames really come through, I think there's a long-term downtrend to be had. I know we've been fairly up. I think we could actually look to pivot and turn around. So yeah, I'm looking at a lot more downside, but maybe the first kind of few days, few weeks, we might see some upside, because I think price probably still needs a retracement.
Yeah, no, it's been tricky to watch the dollar index. I mean, from a bigger picture, we aren't seeing the kind of trend you can see on your chart, like that 2021 through 2022, late or summer 2022. You saw that really one side trend. We now see kind of, the dollar index on a weekly time frame, quite choppy, quite back and forth. But I think you made a good point with this level here, that psychological 100 level, which I don't think is coincidentally a huge level of support when looking left, right? That's a 100 level. It's a really big level of support that you just mapped out. I think you're fair to point that out. Like, if we get something like this to end out the month, that could signal that the dollar index, while it looked like maybe it's oversold in the short run, this is the point, is, as you pointed out, the longer term can have these huge moves that, we saw over here in 2022. We could totally see the opposite happen if this, price can't hold. If we see trade deals don't materially improve or something like that, that could really be the catalyst for a bigger.
I posted a Instagram reel today, and I'm not going to go into it too much, don't worry, just to kind of explain it, because I know the majority of retail traders will have this goal or this dream that they would love to get allocated capital. I'm not talking about prop firms. I'm talking about investors or even institutions allocating you capital. I saw an individual on X or Twitter yesterday that posted a tweet saying that they've been allocated 1 million, then after 3 months they'd get 5 million, then after a year they get 20 million. And this was apparently by a hedge fund. So I did a reel basically trying to explain how that type of thing really works, because it's not that simple. It's not a case of you'll get noticed and, you know, JP Morgan would start giving you money to trade with. One of the big things, and this is why retail will never, or well, has a very, very small chance of ever actually be making it into the big time with the big boys. It's not because you can't trade. It's actually because of your regulation. So if you look at the way JP Morgan or these hedge funds operate and their compliance and risk, they would never, ever give someone unregulated access to capital. You would have to be, as I said, regulated, or you'd have to be working under a licensed entity. So you'd have to have a firm that is able to manage investor capital legally. And then obviously that's not getting into the claims of capital, you know, 20x capital in 1 year increases a bit strange, but anyway, like I said, it wasn't a video trying to expose someone or anything like that. It was more of an educational reel trying to explain how investment into traders actually works and what can happen and what can't happen, and those types of things. Anyway, let's actually get into the charts. Someone mentioned there's a Trump thing tonight, and I'll be honest, I didn't even know that was coming. Oh, it's actually pretty soon. It's in about 40 minutes. So yeah, I guess I'll be live for that on here, so we can pay attention. Like I said, I had no idea that was coming. I'll be perfectly honest with you. Very professional over here, keeping up with the news as we do. So the FTSE is still on the watch list, but I need to just make sure it's still on the Edge Finder. I'm a bit behind with my analysis today. I've been primarily paying attention to the unemployment news or the jobless claims. So let me just do this. So we don't want neutral, let's get rid of that. So let's see what's here. So the Dow is still here. We've got the FTSE, NASDAQ, New Zealand dollar CAD. I think someone was looking at, was it Miko or Marco was looking at New Zealand dollar CAD, I think. That might be one to pay attention to. New Zealand yen, I think Nick's in New Zealand yen. I think he mentioned that one yesterday. So maybe we'll have a look at those ones as well and see if we could find a potential trade. So the FTSE, I still like the FTSE. We just had the Bank of England cut rates by 25 basis points. Now, the trade isn't as strong as it was because it sounded quite hawkish from what they said. However, I would still be willing to take a long, because I think the Bank of England, and it's hard for me to say that I think they've misjudged inflation, because they know far more than I do. I'm sure they've got much more clever people. But from what I have seen, I just don't think they're in a position to hold rates. I think they are going to cut again. But we can get to that as more data comes in. As Jay Powell says, we remain data dependent. But from a technical aspect, this still looks like a great trade. We've got the moving average cross indicating that short-term trend change to the upside. We've got previous structure here acting as, or potentially here acting as support. So we can see this break and retest pattern come into fruition. We've got previous structure here for a potential take profit. We've also got previous highs up here. Now I've mentioned the idea on FTSE. I've said this I think in the past 2 streams, so I won't go into it too much. But I would be very cautious trying to get new all-time highs on the FTSE, and that's mainly just looking at the typical behavior of the FTSE. It's very range bound, and it's very difficult to really catch a runner unless you catch one of these moves, which is kind of rare, because like I said, it's typically a very sideways moving market. So it's not something I would be happy to hold into new all-time highs. I'd more rather use the previous highs as just hard take profits, and that's it. Take some money, get out, keep it simple. Bashi was in my stream today. Apparently he's bought a car that he's fixing up, so I think he's quite busy at the minute. what happened to my challenge of ICT? It's still going on, but yeah, nothing else. No updates really. My portfolio is still going, so I've reopened a CFD account, which I could show, but you know what? Hold on. I am going to show it because this is slightly separate. I can't show the name; it's not public, but I'll show it on stream and I'll refresh it so you know it's real. But the reason I can't show it is because I'm building this portfolio for a certain reason, which I'm not going to go into just yet here. In fact, you know what? You can't find it anyway, so there you go. Full refresh, it's live. So I'm up 7% this month on this account, but essentially what I'm doing is building a new company that's trading related that requires a 6 to 12 months track record, which is why I'm not really doing much in terms of showing off history and things, because I'm sort of just building it behind the scenes at the moment. As I said, I was on CFD, then had to switch to spread betting. Then I closed down my accounts because I was moving out of the UK. And now I've reopened them in a business account, so it is what it is. So I'll probably use that one to do the ICT thing, because I'll be honest, I don't think I'll get a reply from him anyway. So yeah, very small account. Yeah, that's the thing. That's another reason. It's kind of just building in the background. It's connected to my Darwin account, which obviously is one I'm sort of prioritizing, just so I don't get lost in the source trading at, what is it, 3,000. It's one of those account sizes where when you're used to trading, 5-6 figures, trading back again on 2,000-3,000, it becomes very tedious, and it's very easy to get into I'm just going to over risk on this trade because I'm bored of taking a $10 take profit or whatever. It's a nightmare, to be honest with you. Anyway, let's get back on topic. What do you think about Swiss yen? Still in Swiss yen. Now, I spoke about Swiss yen yesterday, and I spoke about the real rates, and I'm not. It's tricky because I'm in a position now, because this is such a long-term trade. I mean, I've spoken about it so many times. I'm sure a lot of you are sick of me saying it, but I'm holding this trade for the next year, 2 years. It's not something that's a swing trade or a scalp or anything like that. So long-term, I do still think this market's going to the downside. We've got so much room to come down, and oops, that's not what I want. The long-term idea behind this is still very solid, with the Bank of Japan path to normalization, very high likelihood of the S&B going to neutral rates, if not even negative rates, but that's not the case right now. It seems like the S&B may hold rates in the next decision. The Bank of Japan is pretty dovish. They're not in a hurry to hike rates according to their last decision or their last meeting. The real rates for the yen are still very poor. They're in negative, meaning the yield you get from holding the yen is you're essentially losing money by holding the yen in theory. So it's not that attractive to buy and hold for investors anyway. So yeah, it's not a trade I would suggest short-term traders be in. To the short side anyway, just yet. I think we might still see some higher prices, which is why I took profit. So I had a second entry here because I was on dollar cost averaging my way in on a higher time frame. Had another entry here the other day and took profits on this drop, just so I could book some profits, because as I said, I do think we might see some higher prices. So if we can start coming up to these previous highs, I'll start scaling in again. Short term though, let's have a look. It's not on the Edge Finder. Oh, sorry, it is on the Edge Finder. I stand corrected right here. Swiss yen bullish reading of 6, although I don't think there's really. Sorry, I've just got to put my email in here. I don't think there's anything that really sways my opinion to actually start taking long positions though. Score of 6 is good, but it's not overwhelming in my view. Retail sentiment is majority short. Which, yeah, not great. Well, okay, let's go back to the chart. So if we're looking for a short term or a swing trade long, let's forget my short idea and let's go in with a clean bias. So we've got previous highs here, so resistance that we're going to just use as what it is for now. We've still got the H4 trend to the upside. 50 is above the 200 moving average. I would be looking actually basically for a retest, either back into my initial entry to form this double bottom. Maybe we'd get a retest of this 200 moving average and potentially an oversold RSI here. That would be the technical setup. The other approach would be using the fib, looking for a 50% retracement into this 50 moving average, 50-50, something like this. So we'd see the pullback in here, retest, continue higher. That could also be a play.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.